Hi, everyone. Good afternoon. This is Binod Shankar here. Welcome to the 15th edition of the Career Talk series, where we talk about building a career in investment banking. I am the moderator and CFA charter holder and a chartered accountant with about 20 years experience in the Middle East as in audit, in transaction support, financial control, and then subsequently as an entrepreneur, trainer, and these days as a blogger, and as a podcast host of the Real Finance Mentor podcast. And of course, my current role is part of my wider mandate as Career Services Chair on the board of CFA Society Emirates. So welcome to all of you. And I hope you enjoy this interesting session on investment banking. Next slide, please. Quick talk about career services. I introduced you to the speaker, and there'll be a presentation, of course, followed by a short Q&A. But the format is slightly different today, where we are sort of looking forward to you asking questions and answering them while the presentation is going on as well, to keep it more interactive and interesting. Next slide, please. So as I mentioned to you, we've recently rejuvenated, I would say, the career services function at CFA Society Emirates, where I lead a bunch of 4 volunteers. And we look into many things, an increasing list of things to basically help you upskill and network to improve your career prospects. So one thing we do, of course, the CFA Research Challenge. We do it, this is my second year of doing this as well, where we select a public company and we invite universities in the UAE to compete. This year, the public company is Tabreed, and we have 9 universities, including AUS, AUD, NYU, Abu Dhabi. Last year, we had fantastic results where the winner of the UAE Research Challenge, Middlesex University, actually reached the finals of the EMEA Research Challenge, which was the first time in the history of the CFA Emirates. Something else we do is the Career Center, which actually is a global portal promoted by CFA Institute, where we try to encourage members and candidates to create a profile so that they are globally visible to potential employers. The third thing that we have done and we'll continue doing is working on various financial modeling initiatives. What we've done so far is collaborate or tied up with CFI, which is a course provider that provides high quality online training in financial modeling, and FMI, Financial Modeling Institute, which is actually an exam provider based out of the US, which almost like CFA Institute roughly provides rigorous exams covering financial modeling. Communication is very important for us to keep in touch with you guys. So we issue updates every few weeks, once a month at least, on what's happened, what's happening. And of course, you probably see as quite active, much more active than before on social media, Instagram, Facebook, LinkedIn, etc. This, of course, is this session is a part of the Career Talk series. Like I said, this is the 15th webinar we're having this year. We kicked this off in April 2020. And the reason, the objective rather, is to bring together technical and soft skills practitioners to give you a real feel of what are the gaps and what is to be done to fill those gaps. Again, to make you guys more employable and to make you more work ready. We have also got sort of something called the Career Academy, which will probably be launched formally next month, where we're going to basically go in a more structured way in delivering some specific training solutions to members and candidates. We already did a trial run. We had a pilot of that in October, where we had a 4-day, 12-hour program on financial modeling delivered by an expert financial modeling trainer who also happened to be a chartered accountant, CFA charter holder. So yes, a lot of exciting things have happened, and the future looks quite bright for career services. So watch this space. You will receive communications from us. Yeah. Next slide, please. Right, housekeeping rules. Today's webinar is scheduled for 60 minutes, so hopefully we'll end on or around 7 p.m. All participants are muted, but please ask questions via the chat function while the session is being delivered. We will try and answer as many questions as possible, I promise. This webinar, as usual, is recorded and will be available to view after 1 week on CFA Society Emirates website. And you'll also receive a survey link just before the webinar is about to conclude. So please fill that in, because we look at feedback. We don't ignore it. It's not a mechanical process for us. And we try to improve in terms of topics, speakers, moderators, etc., etc. Right. So it's my huge pleasure to introduce the speaker. Yusuf Salam is a CFA charter holder who works as vice president at Moyles and Company, which is a global independent boutique investment bank. Now, many of you may not have heard of Moyles and Company. It's actually one of the top 10 investment banks globally, and probably among the top 3 boutique investment bank globally. They have quite an active presence in the region. As Yusuf tells me, they have 25 staff here involved in lots of execution work. And some of the work has involved, for example, the Aramco IPO, the ADNOC distribution IPO, ADNOC privatization, work for ADQ, an Abu Dhabi-based sovereign wealth fund, work for Mubadala, again, a huge Abu Dhabi-based investment company, work for Ministry of Finance in Saudi Arabia, et cetera, et cetera. So lots of very interesting strategic work has been done involving, of course, Yusuf as part of the team. Now, Yusuf has over 8 years of experience in M&A, capital markets, restructuring, and strategic advisory transactions across a broad range of industries. Yusuf holds a BS in actuarial science with highest honors from the American University in Cairo. He is a CFA charter holder, obviously, as you know, and is a fellow of the Society of Actuaries. Yusuf also, by the way, is a quite active member of CFA Society Emirates. He's been a quite active volunteer. And he's, I think for a few years now, been a mentor for the CFA Institute Research Challenge UAE edition. So without further ado, I would welcome Yusuf to speak and introduce the agenda as well. Before going further, I will repeat and say that please keep asking questions and we will try to answer them as the presentation proceeds. So the floor is over to you, Yusuf.
Thanks a lot. Thanks a lot, Binod, and I hope you can all hear me well. And thanks a lot for taking the time and joining on a Saturday afternoon. Very much looking forward to speaking to you and very much looking forward to your questions. We'll start introducing the agenda and Sivan in parallel, if you can kindly launch kind of the polling question as well to start the interaction with the attendees. And again, very much looking forward to your questions on the chat. So maybe we give people just kind of a few seconds just to kind of provide their view on kind of what interests them the most in investment banking, whether it's kind of M&A, whether it's capital markets or debt restructuring. Okay, that's a quite close one, oscillating between M&A and capital markets. Okay, that's very interesting. So for people who can't necessarily see the screen, it's 60% on capital markets, 40% on M&A, and actually none on debt restructuring, which is interesting. So thanks a lot for sharing these views. So I think in terms of the agendas we want to talk about today briefly, I think first we want to start at a high level in terms of what are the key investment banking activities, including the 3 of these and other activities that we can kind of and other investment banks undertake globally. Then we want to deep dive a little bit into the Middle East specifically. How does the landscape and the activity level and who are the key players here? We want to talk about the outlook. How do we see the next few months and years for investment banking and for the activity? And then we want to talk about what does the structure of an investment banking track looks like? What are the responsibilities at different levels? What are the entry points? And then finally, how best to prepare for this entry point into investment banking. So we'll just jump into the straight topic, into the first topic. And again, please feel free to kind of share questions on each point as we go through and we discuss them live together. And Binod, please jump in as well and we can have a discussion on that.
Yes, absolutely.
Perfect. So I think the first one is what are the key investment banking activities, right? So the first thing is mergers and acquisitions, right? And here you have a number of different activities under it. So as an investment bank, what we can do here is first is buy side, right? So this is effectively working with a corporate that would like to acquire another corporate, right? So helping them conduct their due diligence, so coordinate the overall, be it legal, financial, technical, commercial diligence, advising them on the valuation of the target, in terms of how much to pay, how to structure the payment, how much upfront, how much is an earnout over time, whether to pay in cash or to pay in shares of the acquiring entity as well, whether to acquire the company as the target or to acquire certain assets in it, what to do with the management afterwards, etc. So kind of the overall kind of bid structure. We help them on bid tactics. So to the extent that our client is part of an auction, how do we make this bid appealing to the seller, for the seller to kind of choose our client vis-a-vis other bids they get from other people, negotiate that valuation and key terms with the sellers, and then move to effectively document the transaction, obtain any necessarily regulatory approvals, any third-party consents, and ultimately close the transaction. The second one is sell side. So this would be the other way around. Our client is a shareholder of a company, they would like to sell it, or it's a company that they would want to sell one of their subsidiaries or one of their assets, whether it's because they want to raise proceeds or because one asset is non-core, etc. Then again, we work with them effectively on devising a marketing strategy. So who are the buyers that we're going to reach out to and why? We prepare the marketing materials. So how to kind of position the company to achieve the highest valuation in the best terms. We then reach out to all the potential buyers. We allow them to conduct their diligence. We invite them to submit bids. We negotiate with them the bids for this company. We recommend to our client kind of which is the best bid. And again, we negotiate it with them. The third one is joint ventures. So this is kind of our client and another company coming together, wanting to create a joint venture. So basically a company which they would jointly own a stake in to operate in a specific country or a specific segment, where them coming together would create benefits for both parties. Then have merger of equals. So these are two companies of broadly similar size wanting to merge their operations together. So again, here working with one of them, identifying what are the synergies, what are the benefits from these coming together, what should be the ultimate shareholding of the two companies in the new combined company, what would the kind of the combined structure look like, etc. Then reverse mergers. So this is basically working for a private company that would like to go public, but instead of going through an initial public offering, which is the more typical route, they effectively find a company that is already listed, and then they merge into it. And in this way, they become indirectly public. They can do it either with an existing operational company, or they can do it with maybe what some of you are hearing today, the SPAC, the special purpose acquisition company, which is becoming a very hot way these days for people to go public by effectively merging with a shell company that has raised money from the public investors. And the last one is assets, acquisition and divestiture. So this is rather than buying or selling a corporate, so rather than buying or selling shares, you just buy or sell a specific asset. It is very common in natural resources, oil and gas, mining, etc. And it is also common in other environments where you don't want necessarily to take certain liabilities that come with the companies. So you want to just buy or sell a specific asset. The second broad group of activities is capital markets. So this is effectively raising capital. So a company today needs to raise capital either to grow, or it's a startup that's facing a cash burn, so they need to continue to raise capital, or raising capital to do an acquisition, or to pay a special dividend to our shareholders. And then we work with them to raise capital from the markets. This can be capital in the form of debt. So whether it's bank debt, whether it's bonds, whether it's sukuk, whether it's financing, for example, from import-export banks, ECA financing, etc. It can be equity, and that equity can be in the form of an initial public offering if a company is private, wants to go public. It can be in the form of a rights issue if a company is already public. It can be in the form of a private placement if the company is private and wants to stay private. So different ways to raise equity capital. Then we have equity linked, right, which is somewhere between debt and equity. So for example, you raise a convertible bond, a bond that gets exchanged into shares, or you help them raise an exchangeable bond, which is a bond that gets converted into shares of another company, or other hybrid. So for example, you raise subordinated debt with some warrants that convert into equity, etc. So other kind of instruments between debt and equity. All of these instruments, you can either raise them in the public market, right? So you can raise them on a stock exchange, be it Abu Dhabi, Dubai, Riyadh, London, etc. Or you can raise it in private by directly contacting private investors, again, whether equity or debt or hybrid. So generally, kind of many different forms to help clients raise capital. Third one is capital structure optimization. So this is working with a company that already has a stack of debt on its balance sheet and wants to optimize it, whether refinancing. So this is basically going out to refinance existing debt by better terms. So a client who wants to reduce the cost of debt by getting cheaper facilities. They want to remove some of the covenants and restrictions and security they provided to banks by getting more lenient debt. It can be restructuring. So this is effectively, a lot of this is happening kind of these days because of COVID-19. There is a lot of pressure on cash flows of companies, and hence they want to reschedule some of the debt payments they need to make, push out maturities. So we kind of conduct restructuring, right? Whether it's by converting some of the debt into equity, whether by pushing out the maturity of the debt, whether by reducing the amount of amortization the company needs to pay on the debt to reduce the pressure on cash flows, etc. And the last one is recapitalization, right? And this links to capital raising. So this is effectively raising additional capital in a more distressed or stressed status in order to recapitalize and improve the health of the balance sheet. The fourth one is funds advisory. So this is working with effectively with general partners of funds, whether regionally, people like Mubadala, etc., or internationally, right? So big funds like KKR, Blackstone, BlackRock, Carlyle, etc., to raise funds. So this is effectively going to limited partners, potential limited partners. So people like sovereign wealth funds, insurance companies, pension funds, endowments, etc., and raising capital for them, from them for the private equity companies to invest in kind of in private equity and other types of funds, and also for listed funds. So this is effectively funds which are going public to raise money directly as well from the public markets to invest. And then the last one is strategic transformations and strategic review. So this is effectively working for companies which want to completely transform. Like, for example, we have done with ADNOC for the last 3 years, where kind of it's a complete strategic optimization. So basically we did 9 transactions across all of their different subsidiaries to bring in international capital, bring foreign direct investment, kind of optimize the capital structure, etc. So this is kind of a complete revamp of the portfolio to kind of manage it more actively and extract more value from the portfolio.
Thanks, Yusuf. That's a good overview. One question, Yusuf, in the GCC, you have this 5 verticals, right? Activities.
Yes.
What is the ranking here? Which is the biggest in terms of, I don't know, amount or volume, and which is the least popular or, in terms of activity?
Yes, so maybe starting from the least. The least is funds advisory, number 4. So in the Middle East, we don't have a big buy-side industry. So we don't have a big funds industry, right? So unlike the West and to some extent the East as well, China, etc., where you have a very large number of kind of private equity funds, credit funds, etc., that doesn't exist a lot in the Middle East. And that is historically because a lot of the companies in the Middle East are owned by governments, by family offices, etc., who own this via multiple generations. And hence there is less assets available to be owned by kind of private equity hands. So this is kind of improving over time with kind of Mubadala raising their funds, with ADQ, the new player in Abu Dhabi, being super active in the last 2 years, etc. It was obviously also affected by the Abraj situation, which cast kind of a big shadow around the ability of buy-side players in the Middle East, unfortunately, to raise funds. So I would say that is the least active. The capital structure one, let's say, goes through cycles, right? So there are times like, for example, 2009, 2010, when after the financial crisis with the whole kind of Dubai government restructuring, Dubai World, Nakheel, etc., that was extremely active. But in kind of other good times, that tends to be a little bit less active. So that's kind of more a little bit goes through its cycles. Then I would say kind of capital markets, which kind of historically there haven't been as many kind of IPOs, and kind of the UAE has went kind of through a bit of a quiet spell, but that has recently picked up quite substantially, driven by a number of things. One is kind of the exchanges doing a lot of modernization work to effectively attract companies, to smoothen the process, to make an IPO process easier and faster, and that's now attracting a lot of company, and we've seen quite a lot of activity in the UAE and Saudi over the last 12 months. Then I would say the strategic review, which again historically has been in good times, you tend to see less of these because people are more comfortable. But in recent times, as a result of COVID-19 and as a result of oil price drops, etc., there's been a flurry of these because everyone realized that they got to be doing something, they got to be improving, they got to be transforming, they got to be moving. So now that's becoming a very active segment. And last is M&A, which I think is the classic investment banking that's typically always active for different reasons, right? So sometimes you have kind of in good times, you have a lot of kind of buy sides, a lot of people out there to acquire, to expand, etc. Kind of in times of low oil price, you have a lot of sell sides from governments, where governments are looking to privatize, raise capital, etc. But typically, you always see a very healthy M&A activities year on year.
Thanks, Yusuf. Please go ahead.
Thank you, Binod. Then the next one is deep diving into the Middle East specifically. How does the landscape kind of look like, and who are the key players, right? So the first one is the investment banks themselves. And broadly, you see them in two buckets. One bucket is financial institutions, or effectively fully fledged investment banks, who basically have kind of the pure investment banking in terms of corporate finance advisory, but they also have effectively their research, their trading, their kind of asset management, etc. So it's kind of wealth management. So it's the full suite of kind of investment banking activities. We have some examples, the next names, but obviously these are the likes of Goldman Sachs, Morgan Stanley, JP Morgan, etc. Then you have the independent financial advisors, which are kind of what Binod introduced as the boutiques, right? Which are the banks which don't have any research or trading or other arms. It's a pure investment bank, but effectively the only department you have is the investment banking department, which is focused on corporate finance advisory. Kind of like Lazard, Rothschild, Moelis, etc., and other names, and we have more of these names as well on the next page. And the good thing is in the Middle East, pretty much every major bank globally is present in the Middle East, right? So with kind of very, very few exceptions, all the big financial institutions and more than predominantly most of the independent financial advisors are present in the IFC, and some of them as well have additional offices in the Abu Dhabi global market, in Abu Dhabi, some of them in Saudi as well. So it's becoming an extremely active market. Effectively, all global players are kind of well entrenched in, plus obviously all the local and the regional players as well. So all the investment banking arms of the commercial banks, some of the other kind of independent investment banks as well, regional and local, who are not tied to specific commercial banks. Second, obviously, you have the most important part, the clients, right? And here you have a very diverse base of clients in the Middle East. You have governments who are extremely involved and effectively one of the biggest, if not the biggest client, whether directly through the various ministries, which kind of take an active role in the economy and regulation and participation, and through effectively all the government-related entities and the government-owned companies which they own, right? So the biggest banks, the biggest utility companies, energy companies, etc., are kind of majority owned and controlled by the government. Then obviously you have all the corporates, so kind of the corporate, independent corporates, whether the ones which are publicly listed or owned privately. You have the family offices, right? So these tend to be the offices which are organized by big families who effectively have a professional management with investment staff, etc., to manage investments on their behalf, whether kind of in their core kind of flagship companies, their source of wealth, and also in other investment activities regionally and internationally. You have the financial sponsors, which, as we talked, are not that many, unfortunately, in the region yet, but they kind of continue to be an important client. And last thing is, again, the funds, like we discussed. The third important is the projects, and we won't spend time on that. Basically, pretty much all the activities that we've seen on the previous page exist with kind of the relative level of activity like Binod highlighted, but all of them do exist in the Middle East. The fourth one is really activity level, right? And for that, pretty much we see it at an all-time high, right? So just to give you from personal experience, I joined Moelis in 2016. We were around 9 people. We started this year with 17, so we kind of doubled over these kind of 3.5 years, and then we're ending this year with 25, right? So we effectively almost added 8 people in 3 years, and we added 8 people again in 1 year in the COVID year. So this can kind of give you a bit of an indication around how super active the market is, specifically this year, right? Because of COVID-19, because of the oil price crash, which created an immense amount of pressure on companies and governments to raise money, to raise proceeds, to restructure, to transform. So all of the activities that you saw on the previous page came into play this year, and also driven by the logistical ease introduced by COVID, given now everything is virtual, which means clients and counterparties can do much more than before, right? So previous deals which used to get delayed by meetings, by travel, by needing to wait, etc. Now with everything done virtually, everything is back to back. The whole day is back to back virtually. People are moving, people are connecting from all across the globe, and there's no more logistical delays at all. Everything is seamless, meaning that the activity is extremely high, both for fundamental reasons and logistical reasons. And last, you see some of the catalysts like we talked about, right? So kind of the oil price drops always catalyze activities because it creates more pressure to raise funds. There is a strong push to diversify in the Middle East, right? So effectively with the environmental, social, and governance, ESG concerns becoming extremely big globally, with a lot of emphasis on peak global oil demand, etc. The governments in the Middle East are making a very hard push to diversify from oil and gas into entertainment, travel, tourism, industrial, etc. So there is a lot of both sell-side activity in the oil and gas to raise proceeds, and then a lot of investment activity, buy-side, project finance, etc., to redeploy these proceeds into the other sector of the economy. And that's obviously perfect for banking because you get to work on the actual raising of the money, and then you get to work on the redeployment of the money again. There is the kind of the new regional champions, right? So people like, again, ADQ out of Abu Dhabi, effectively trying to transform the full Abu Dhabi government-owned sector, make it kind of much more commercial, competitive. ADNOC kind of effectively coming out to become kind of a complete kind of world-class energy player, kind of top governance, top partners, etc. So a lot of kind of players in the region are now really focused on becoming complete world-class, becoming regional global champions. A lot of focus on bringing foreign investment into the region, right? So kind of historically, the region used to be a place for some of these funds to come raise money and then deploy it outside. Now the region is kind of becoming a real deployment opportunities for a lot of the global funds, right? So as part of the ADNOC work, we got people like BlackRock, KKR, Brookfield, the GIP, etc., to invest in that, right? So it's becoming a lead investment destination. And COVID-19, as we discussed, both kind of creating more pressure and also allowing logistical ease.
Yusuf, you mentioned financial sponsors and their clients. So who are these guys?
Yes, so you have kind of financial sponsors in the sense of, so I have the international ones. So these would be Carlyle, KKR, Blackstone, etc. Some of these effectively have investments in the region. So for example, Carlyle had kind of a $750 million fund in the region from which they made multiple investments. That fund, let's say, is now coming to the end of its life. So we worked with them this year on their exit from one of their portfolio companies. So effectively, we work with them once an investment has reached the end of its life, they become a client in the sense of they're exiting from the company. And then you work with them on the buy side when they're investing in. So basically, it's predominantly private equity companies.
Thanks, Yusuf.
Thank you, Beyond. So again, we won't spend time on this, but just to kind of give you a bit of an examples around who are the banks in the region. And pretty much the answer is everyone is in the region, right? So if you look at the table on the left, you have all basically the big investment banks, like we discussed. So these are the fully fledged investment banks. And on the right, you have some of the independent boutiques. Again, some of them have kind of just came into the region. So kind of Houlihan has come in a couple of years back. PJT has just struck a partnership with De Novo this year, etc. So whoever kind of wasn't here, Evercore has also opened a couple of years back. So whoever wasn't in the region already is now in the region. And the very, very few names that aren't in the region as of today, we'd expect that they would be here quite quickly. So the opportunity is kind of quite large. Obviously, the offices that these banks have are not as big as a New York office or a London office would be, but it is still kind of a very decent presence. As I mentioned, we have 25 bankers. Most kind of banks would have 10, 15, etc. So it's kind of quite a large presence, predominantly concentrated in the IFC, but kind of across different parts of the region as well. In terms of what does the track in investment banking look like, right? So basically, typically the best starting point is internships, right? Because kind of the next starting point is an analyst, but typically there's much more competition on the analyst role. So coming in as an intern, whether it's a summer internship of 3 months in the summer break, or whether it's an off-cycle intern, which is basically you come in for 6 months during any time of the year where either you've already finished education or you're able to take off, etc., is typically the best entry point for candidates, because there tends to be a bit less competition for that role. And once someone has come in and got an opportunity to prove her or himself, banks typically tend to like to hire interns into analysts, because you know what you're getting. You've already worked with the person. So, and we'll talk about that in a second again, in sense of how do we go for kind of preparation and what's the best way to break in. But definitely would recommend internships is definitely by far the best way, both to get a feel of the job, to build the right experience, to put the right kind of brand names on the CV, and to kind of develop the right connectivity. The intern work tends to be very close to the analyst work. So it's basically, you tend to get a lot of the responsibility an analyst does, which is predominantly focused on financial modeling and kind of presentations preparing, right? Whether it's, again, if the presentation depends on the project. So if it's a sell side, then it's the information memorandum that goes to the buyers. If it's a buy side, then it's the investment committee paper that gets presented internally to make the investment decision. If it's a debt restructuring, then it's the presentation to the banks, where we're preparing the kind of proposing the restructuring plan, et cetera, et cetera.
So, Yusuf, a question: how many years of minimum and maximum experience required for the analyst position?
So the minimum, there is no hard minimum. It can be 0, it can be right out of university, but in that case, it would require internships. So if someone effectively have done solid kind of 1-2 internships with kind of well-reputed investment banks during university, they can join immediately as analyst fresh out of university. In terms of maximum years, it would depend on the level as analyst. So basically, as an analyst, we have 3, you do 3 as an analyst 1, 2, 3. So if someone is joining completely fresh as analyst 1, then the maximum levels of experience, the years tend to be 3 to kind of 5 at the max, in order to make sure that the gap does not start to become too much and the person does not start to become overqualified. And then if it's an analyst 2 or analyst 3, then you can increase that proportionately. So for an analyst 3, for example, the maximum, let's say the absolute maximum would be kind of 6-7 years.
I've got a lot of questions coming in, Yusuf, yeah, as expected.
Please.
So another question is, someone has 2 years experience as a financial analyst, but not in investment banking. This person works in a construction company. What opportunities exist, if at all any, in IB?
Yes, so there's basically a few ways, let's say, to kind of do that conversion, right? So one way, which is kind of more classic in the West, unfortunately, than it is in the Middle East, is to kind of go for an MBA, right? So to also complete the 3rd, 4th year, you go for an MBA, and typically in Europe or the US, that would allow you to do a complete repositioning, and you can effectively break into investment banking directly as an associate, right? Which is effectively the next level. Because in Europe and the US, what you would have is you'd have very extensive training programs at the associate level. So you can either get to associate by being promoted from analyst, or you can get to associate by effectively doing something else, doing an MBA, and then getting into associate. Unfortunately, in the Middle East, that tends to be a little bit more difficult, because the bank sizes are not that large to allow for very big formal training programs with a lot of time for people to kind of get up to speed, etc. The requirement is really always for people to hit the ground running, because they tend to be a little bit smaller, more focused teams, which tend to be always under kind of high pressure, etc. And kind of everyone has to hit the ground running. So if you want, that's more of like the classic Western route of kind of getting into investment banking from different track, is to complete your 3 to 5 years, do an MBA, and then reposition at the associate level. In the Middle East, that would become kind of less typical, right? On the other kind of complete bookend, which we've seen people doing, but is a more risky track, is to effectively leave the full-time position, do an internship with one of the banks. So kind of start from kind of box number 1 rather than box number 3, and then convert the internship into an analyst. Obviously, that's a much more risky track, because someone will be leaving a full-time job for an internship, which obviously, if it doesn't convert, then it's a risk, because you're kind of really looking again for a full-time, right? So that, if you want, is the highest likelihood track in the Middle East in terms of being able to break in, but clearly you're taking a risk once you break in. And then the middle option is to effectively try to go directly from a kind of a financial analyst outside investment banking into an analyst in investment banking. It is challenging because kind of, again, for an analyst, there tends to be a bit of a requirement of having done at least an internship in the sector, not being kind of completely fresh, but it is not impossible, right? And this is where I think we'll talk in the next slides about some of the other points that people look at in terms of kind of interviews, in terms of CVs, etc. And to the extent that maybe some of the other things exist, even if the internships don't exist, it can still potentially be looked at, but it would be kind of less probable than the internships.
I think a lot of questions are coming in, but I think your next slide, Yusuf, would probably answer many of the questions. So please go ahead.
Sure. So I'll then wrap up very quickly on this one and go to the next one. The next level is the associate, which is basically tasked with day-to-day management of the transactions. So kind of is the day-to-day kind of project manager on all these transactions. The next level is vice president / director. These are kind of called differently in different banks. So, for example, Goldman only has vice president. That's the name they use. Other banks have vice president to director. Banks have vice president to executive director. So, but basically, regardless of the terminology, some of them has SVP, senior vice president. But regardless of the terminology, the point here is being the execution lead on the transaction. So the one basically leading on the content, etc., on the structuring, etc. And then the last one is managing director, which is the most senior role, which is very focused on business development, bringing new business into the bank, effectively developing new relationships with new clients. Then getting into hopefully that slide. So I think we talked about internships, right? And really can't stress enough how important internships are. And to the point we just discussed, after graduation, after getting a different career, it becomes a bit difficult to go back, right? Because then it's kind of a difficult decision to leave a full-time job and gets back into an internship. It's also a bit less natural. So to the extent we have kind of any university students on the call today, really, if there's one thing kind of I can leave with you from that call, it is really internships, right? The more you can have internships during your undergrad, during your postgrad MBA, that is the top factor on the CV, because simply it implies that you've done the work, right? You've been in that exact position before, so you're tried and tested in a way. You've also went through a similar recruitment and interview process before, because even internships process at top investment banks tends to be quite rigorous. So that is the one thing that I'd focus on the most, right? So if you have different options during your university years or your MBA years, what to do for the summer, what to do for the winter, etc., I'd really focus on that. Even if kind of you have to raise something as easy. We see some people, even they get a very good internship, let's say do 3 months, the bank wants to extend for another 3 months, they, for example, delay by 1 semester, etc. Like, it's really important. I would say it is it's the most important thing in this presentation.
So Yusuf, I'm going to jump in here. So I think
Please.
most of our database, and most at least of the attendees today, have finished their graduation. They are beyond internships. They have probably done their CFA level 2 or level 3, and they're probably 2 to 5 years experience. So I think if you can focus on that, that'd be fantastic.
For sure, absolutely.
Yeah, thanks.
Absolutely. Then in terms of the second thing that people really look at, right? And this is when it comes to we'll talk a little bit in a second about how to prepare for the interview itself, but just looking holistically at CVs, interviews, etc. What do people really tend to focus on in order of priority? So internships is the first. Second is the motivation and the communication, right? Ultimately, the person kind of doing the interview, etc., speaking to the candidate, the first thing kind of she or he is thinking about is, I'm going to work with that candidate. I'm going to probably work with them for many hours every day, etc. Do I really like the candidate, right? And that's why kind of motivation and communication is extremely important when it comes to whether it's the initial approach when you're sending a LinkedIn message to someone, whether it's during the interview, whether it's the kind of any cover note you send after the interview, etc. And what really people are focusing here is kind of whether you really understand kind of IB, right? You've done the research, etc. How enthusiastic and kind of motivated you are about it, and how good kind of your communication skills are, right? Written and verbal. Because ultimately, most of the work, like you would have seen from the previous slide, is around kind of stakeholder engagement and kind of project management and interacting with counterparties, regulators, all other advisors involved, etc. And hence kind of communication is really the key thing. I will talk a little bit in specificity in the next slide in terms of the communication during the interview, etc. The third thing that people look at is the technical skills, right? So to extend back to the example of someone coming from financial analysis, not from investment banking, but to the extent that in this financial analysis experience, there is experience with financial modeling, right? And financial modeling in the sense of kind of building business plans with kind of three statements, right? And kind of doing valuations, etc. And kind of just being generally strong with Excel. That's extremely critical. And again, presentations, right? So being able to prepare and present kind of very professional presentations. The fourth one is academics, right? And again, back to Bino, to your point that kind of for people who have already completed their undergrad, right? So to the extent people have already completed their undergrad, the question becomes kind of from which university, let's say. Unfortunately, the brand name of the university, similar to the brand name of the internships, does play a big role. Now, a lot of times it's not necessarily immediately indicative, right? And kind of if you speak to the candidate, the kind of the quality of the candidate isn't necessarily always reflected by the quality of the university. But unfortunately, with having a large pile of CVs, with people just looking for something to screen with, academics tend to be something that kind of people really look at. So to the extent that people have completed a bachelor's, they don't think the university name they completed the bachelor's from is getting a lot of traction, then one way to do it would be to go for a master's or go from an MBA from a top ranked university and try to kind of get something from there. Unfortunately, again, kind of people tend to focus on really top ranked, right, in terms of top 10, top 20, etc. So a lot of times people are kind of slightly disappointed by going to universities which are still extremely well reputed, strong universities, but people not necessarily kind of getting the same traction. So it's really to the extent you can go for an absolute top ranked, that's always kind of extremely powerful and gets you in for the first conversation. Also, to the extent you're going for this program, for this postgraduate, whether it's master's or MBA, trying to travel during the programs to the extent that the university offers any semesters abroad would really encourage that you take these, right? So effectively, if the university has multiple campuses, I know obviously with COVID, etc., everything is restricted, but it is like being well-traveled, exposed to different cultures, showing flexibility is very important because again, the nature of the work tends to be pretty much cross-border with involvement from different countries. So people who speak multiple languages, who are well-traveled, etc., do get a lot of advantages based on that. And then any form of extracurricular activities, right? Which again, to the extent you're doing an MBA or a master's, any on-campus activities would highly encourage participation in that, right? Again, this is how people would screen during interviews and during kind of reviewing the CVs. And then the last one is the CFA, right? And kind of in terms of taking the exams. So level 1, Bino also mentioned level 2, level 3. And this is important from a couple of perspectives, right? One is just attracting people to the CV, right? Having it there, which shows people that the candidate is committed, that he's done the hard work, he can or she can study hard, really put in the hours, which is important. It's a differentiator. And second, in terms of actual content, especially for people who haven't necessarily studied finance as their major, it is a way to really catch up and build the foundational finance language.
Right. So I'm going to ask an interesting question here. So if you take out internships at the first number 1 and 2, right?
Yes.
Yusuf, on the slide. And you talk about number 3, 4, and 5. What are the various combinations that work? Because, for example, someone may not have gone to a great college, but yes, they might have done level 2 or level 3, right? So what works and what doesn't work? I mean, what works rather, you know?
Yes, I think between the three of them, and I would really split them, the three alone, technical, and 4 and 5 alone, because 3, you kind of, it's difficult to get that from the CV. Some people do put on their CV, for example, I've done this financial modeling course online, etc. But to be honest, this is more helpful when it actually comes to the case studies and the interviews. People typically don't give a lot of weight to kind of just courses mentioned on the CV. So point 3 to me is more about, and again, under that you have presentations. Some people, for example, send with their CV a well-drafted cover note or cover letter or a brief presentation, etc. That can actually be more helpful. So like if it's between kind of putting on the CV, I've done a financial modeling course, that's not really that helpful. It's helpful when you actually get the interview to demonstrate that, but on the CV, it's not that helpful. But the way you can use point number 3 in the CV is when you're sending the CV itself, if you've done a presentation before in university or the CFA Research Challenge, or for example, you've prepared actually an Excel model as part of that online course, etc., submit that as well, right? Whether it's through the official portal or whether kind of you're chatting to someone who's kind of passing on your materials to HR, try to submit something of that, right? To show that you've actually done that. So point number 3, I would say, is predominantly for the interview or the case study, but you can kind of have a precursor into that, like I just mentioned. Between 4 and 5, I think it depends on, when we say academics, how really top ranked. If it's a top 10, top 20 university, then 0.4 would trump 0.5. So people would be more attracted by the university brand name if it's kind of top. But if it's a top 100 university, then no, probably people would put a little bit more focus on the CFA. But I guess really the approach is, because back to your point, Binod, some things may just not be possible, right? You've already graduated, you can't do an internship, you don't want to cut your career and go for a postgraduate. So I wouldn't kind of think of this as a trade-off. I would think of it as, what can I do out of these 5 things, right? What is practically possible, and do as many of the practically possible things as you can.
Thanks, Yusuf.
So Binod, I'll continue, but please interrupt me if more questions are coming through the chat.
Sure.
And
please go ahead. Thanks.
So the next one is really how to prepare for an interview process, right? So assuming you've kind of already done that kind of the initial intro and you're to an interview. So one is research, right? So kind of the classic way to kind of lose the interview in the first kind of 1 minute is that people ask you kind of, what do you know about the company or the team you're interviewing to? And you don't know, right? So for example, like you're interviewing for a team, they've just done a big deal, it was publicly announced, etc. They ask you about it, and you don't really know, right? So anything that's kind of, now you're not supposed to spend day and night, but anything that's kind of, that basically when you type the name of the bank, kind of it's kind of first page Google, or anything that you can, when you type the name of the bank plus the specific office or the specific team you're applying to, you're expected to know in the interview. It shows a couple of things. One, that you're really interested, right? Not that this is one of kind of 20 interviews you're taking, which is fine. By the way, if you're taking 20 interviews where you're all really focused and interested in maximizing the chances, that's also absolutely fine. But what I mean is 20 interviews where you just don't really care and you're just kind of doing one after the other. And it also shows that you generally do your homework, right? So the same way people would expect that once you start working, before going to a meeting, before kind of speaking to a client, etc., you also always be kind of checking and trying to kind of get ahead of the game. The second thing is refreshing on technicals, right? So usually when it comes to technicals, people would start with basic valuation accounting questions. So on valuation, they just ask about WACC, comparable companies, comparable transactions, and DCF, etc. And on accounting, they'll ask simple questions about kind of how does certain things flow through the financial statements? How does it affect the 3 statements, right? And the expectation is to kind of know these basics, whether from the finance bachelor, from the CFA, from an internship before. So it's just helpful to refresh on these literally kind of very basic questions, which you would always expect to get, again, because you expect to know them, and 2, because you expected to know that they will come in the interview, right? So you're expected to have refreshed. Third is rehearsing, right? So there are things which you really know are going to happen, right? 90% of the time, the person is going to ask you to kind of introduce yourself very briefly, right? She or he is going to ask you some of the questions we just talked about, right? And they would be expecting that for each of these, you will have a very concise, kind of well-spoken answer in 1 to 2 minutes, right? So it's really important to rehearse, right? It is. Some people may still surprise you in interviews with different questions, but a lot of the questions you can really anticipate them in advance. And the more rehearsed you are, the answers will be more assuring, they will be more concise. And just being concise in interviews is really extremely important. Because again, one of the classic ways to lose an interview is just to keep going on, right? And just one of the classic ways to lose everything anyway. That's why I keep bothering Binod and saying, please ask me questions and please interrupt, right? Because really the best way to lose someone is just to keep talking, right? So in the interview, you kind of really need to be kind of super concise. So if you can rehearse, again, that's, I think, really, really good. The fourth thing is the actual interview, right? And obviously first impression, right? So now, for example, we're having, let's say, all of these interviews on Zoom, right? And or either of them in person. Expectation is you're going to be there a few minutes early, right? Whether it's a meeting or it's Zoom. So again, if a person dials in kind of 1 minute early or on time, kind of she or he's expecting you're there. If we're having it on Zoom, people are expecting that you probably have the camera open, right? And you're kind of engaged, etc. And then throughout the interview, you're really engaged, right? You're kind of you're listening, etc. It's really important, right? And this communication, just being relaxed, kind of being yourself, having a bit of kind of open dialogue, etc. is important, right? So when it comes to the question, when the person asks you to have questions at the end, having prepared questions, right? Not saying I've already asked all my questions in the interviews before, right? And having kind of questions ideally based on something that has been discussed in the interview, right? So you prepare a few things, but then you listen to what the person is saying and you try to tailor the question a little bit rather than coming with a question that's kind of pre-written completely, right? When the person answers, to the extent there's a follow-up you can ask on the question, right? Because you're just not asking the question just for the sake of it, just to tick the box, right? You show you're kind of really interested. So a bit of follow-up on the question would be nice, and just generally being engaged, taking real interest in the person and kind of allowing the person to also take real interest in you, right? And then the last one is really practicing for the tests and the case studies. So again, the tests and the case studies are very typical, right? So usually the online test that you would get would be the very typical math and English test, right? Which is what you'd expect in kind of in universities, in GMAT, in companies, etc. And most of these are kind of available online, right? So kind of just trying to do some of these. The case study is typically, again, very standard, like develop a financial model, right? They give you historicals. You're supposed to build kind of a 3-statement kind of financial models, which is practicing on these presentations, right? Building a corporate profile. So today you can pick any publicly listed company and try to kind of build 1 or 2 pages PowerPoint of the company, right? It's management, it's shareholders, it's key activities, clients, geographic roadmap, and really practice your PowerPoint skills, right? So a lot of this interview process is highly repetitive, right? And the more you can get ahead of it, etc., it kind of allows you again to just be doing it very calmly, used to it, and kind of not get surprised by anything.
So Yusuf, it's like become an urban legend or urban myth that, if you want to get into investment bank, you have to go through 500 interviews and 3,000 tests and things like, I mean, whether it's in New York, Dubai or Mumbai.
Yeah.
But jokes apart, assuming that, you have accounting and valuation and presentation and modeling knowledge, I'm sure you guys, or generally investment bankers, look for some specific personality traits, apart from the general ones you mentioned about communication, et cetera, et cetera.
Yeah.
Specifically, what kind of girl or boy are you looking for specifically?
Yeah, so I think the first one is friendly, right? Because we tend to, obviously the hours tend to be long, the stress and the pressure tends to be high, and you tend to be constantly in communication with clients throughout the day, right? And ultimately the worst thing that can happen is someone not to be friendly to a client, right? So you get a request and you react in the wrong way, right? So the person, one, has to be extremely friendly, extremely polite, right? Because that's a given, right? One kind of wrong word to a client and you lose the relationship, right? So that's kind of point number 1. Point number 2 is engaged, right? Because again, the whole point, this is that just investment banking in general is really trying to get a transaction done, right? That's really all what you're trying to do from day one to the end day of the transaction. And that means you're trying to convince everyone, trying to convince your own client to do the deal. You're trying to convince the counterparty, the regulators who need to give you the approval, all the other fellow advisors. You're convincing the board. You want to convince the investment committee. So someone who really needs to be engaged, be a good communicator, really be able, it's marketing at the end of the day, right? It's a sales job. Whether you're on the buy side or the sell side, you're either marketing to the buyer, or you're marketing to your own investment committee of the client to buy the counterparty, or you're marketing to the banks who you want them to restructure, or you're marketing to the public investors who you want them to subscribe to your IPO, right? So it's pretty much a marketing and a stakeholder engagement job, right? So really being kind of really engaging and just being able to communicate well with people is the most important thing. And third is obviously hard work, right? Because obviously the hours are long, again, the pressures are high. So someone who can really put on the hours, carry the weight, and kind of be a real kind of team player with the team.
Thanks, Yusuf. Thank you. Thanks. Please go on.
No, at all. So, I think that was the last slide. So maybe just open it for more Q&A from your side, from the attendees, etc. Completely open, whatever you think is best.
Well, one question that came in was, is Moelis currently offering any internship opportunities in Dubai?
So very unfortunately, we've just concluded the recruitment for the year. So we added kind of 8 people this year, and we added an associate, 5 analysts, and 2 kind of off-cycle interns. So unfortunately, we have just literally completed the recruitment. So basically, the way it tends to happen is we tend to recruit around 9 to 10 months in advance. So basically, kind of based on the full requirement for, let's say, kind of summer 2021, we tend to, in the previous year, kind of close that, and then people start arriving over time from kind of fall, etc. So I think we'll probably be reopening again around the summer, right? next year, 2021, and that would start to reopen for kind of, again, for the following year requirement. So obviously, like, more than happy to kind of stay engaged with people. I think, I don't know, Binod, if you'd be able to share my contact details as part of the session, would like me to share them in some way, more than happy to keep in touch with anyone who'd like to. And when the right opportunity arises or when things open again, I'll definitely make sure to kind of share that.
What I will do is, I think at the end of this, I'll post your email address on the chat box, if you don't mind, Yusuf, yeah?
Please go ahead.
So that they can contact you directly. Something I want to ask you regarding this whole opportunities and investment banking as well. What do you think of the outlook for the industry in terms of over the next 1 to 2 years? I know it's very difficult given COVID and oil prices and economy and everything, but what's because that will drive the hiring, right?
Absolutely. Look, I think we have, like, when I look back again, Moelis opened in the Middle East in 2009. It was one of the first banks to open, and since then it's been growing consistently year on year throughout the oil prices crashes, COVID. If anything, these have helped. I look at other investment banks. I see investment banks coming to the region. Like every other year, you see more investment banks coming. You don't really see anyone pulling out. Even you may hear, for example, one bank or two reducing their office size, but it's more of tactical decisions around whether to cover the region from Dubai or to cover it from London or to cover it from Paris. I'm a strong believer that you need to cover it from Dubai. You need to be in the middle of it all, but some people prefer to cover it from London, from Paris, etc. But everyone is kind of keeps adding to the region. So I don't see any reason for that to be reversed. I think 2020 in a COVID year has probably been the best year for most investment banks in the region. And with most countries kind of having the Vision 2030, etc., having governments driving a lot of activity, I see kind of even probably the next 5 to 10 years, not just the 1 to 2, being of continuing growth.
Right. Yusuf, I've got a lot of questions regarding changing careers. Obviously,
yes,
people see investment banking as sexy, and I think your presentation has now made it super sexy. So
I wish not the opposite.
But on a serious note, so there are some people who are so there are 4 areas from which 4 people want to switch from, and you can give your opinion on how feasible this switch from that sector to investment banking is. The first is consulting.
Mm-hmm.
The second is data science, data analytics.
Mm-hmm.
The third is corporate banking / lending.
Mm-hmm.
And the fourth is auditing. And you can probably assume that they have some sort of CFA level 1 or level 2 pass along with this backgrounds as well, assuming, yeah?
Absolutely. So I'll rank them, but please take these rankings completely, and I'll explain why, but please take them completely in the spirit of assuming it's exactly the same person in the 4 positions. A lot of that is driven by the specific person. So whatever is ranked number 4, that doesn't mean at all that person is less likely. It's just kind of blind rankings, but obviously the person would play a big role. I would say the first is management consulting. There's a lot of intersection between consulting and banking, especially when it comes to what we described as effectively the strategic reviews, right, and the transformation program. So what we described as kind of if I may go back, kind of this point number 5, right? A lot of that, there's a lot of commonality because it's kind of taking a step back and really working the strategy, right? Why does the client want to do the transaction they want to do in the first place? Also, management consultants tend to have a lot of experience with governments, right, and government entities. They know very well how to kind of work with them, etc. Big infrastructure projects, etc., which are also very common for banking. So there's a lot of intersection. We come at it potentially from slightly different angles. We're a little bit more transaction focused. The consultants are a little bit more strategy focused, but the clients are relatively common, and the projects can also be common. So I'd say that's the most common. Second is corporate banking, because one of the verticals, again, we talked about vertical number 3 is capital structure. So when it comes to refinancing, restructuring, etc., the capital structures in the Middle East are predominantly bank focused, right, rather than capital markets or bonds focused like the West. And hence, someone who has a strong corporate banking experience, especially if it's in certain, for example, within most corporate banks, you'd have like a special assets department or a restructuring, right? So if someone had experience working with these departments, looking at how to optimize some of these facilities after they're given, or someone, for example, in the project finance department, right, working on a lot of these mega projects and structuring a project finance, etc., that would also come in very handy. And then I would kind of leave audit and data science to the end. I think audit is great in the sense of you're really strong on accounts and accounting, and you have the foundation. But clearly, the client and the type of work tends to be slightly different, right? than banking. So it's really trying to use this super strong accounting foundation as a base and kind of build on it more around financial projections, strategy, etc. So kind of how to really go beyond the numbers and the technicalities into the strategy and the finance. And data science clearly relatively similar from a different angle. It's a super strong mathematical background, right? I personally studied actuarial science. It's kind of, I see a little bit of similarity there. For example, where I come from at AUC, the actuarial science and the data science program are both housed under the Department of Mathematics and Statistics, and they're both kind of very strong mathematical programs. So it's really how do you use your very strong quantitative background and get a little bit into quantitative finance if you want, right? And start to also use that as the base. So again, I think they're all good tracks, but it's kind of about finding the most relevant skill set and kind of building on it further.
Yeah, I just found out recently that you're an actuarial science graduate. I heard that actuarial science is like way tougher than CFA, which is like a walk in the park in comparison.
Nothing is a walk in the park, Vinod. No, look, I think it's different, right? I think the actuarial program is longer, right? So you've got to kind of do at the associateship level, it's kind of 5 exams plus courses plus online modules, etc. And then there's a kind of a fellowship program, which is it also gets sometimes too mathematical, right? With kind of stochastic and kind of and things like that. So it gets really mathematical. So it's kind of quite a lengthy road. But look, ultimately, like everything is helpful and everything kind of serves its purpose, right? So sometimes one thing can be kind of more difficult than the other, but both are very helpful and both are kind of really great journeys to go through.
Fantastic. Unfortunately, we have come to the end of this very interesting, very insightful and interactive session. We've actually answered almost all the questions. Some questions were regarding investment banking activity itself, like valuations and capital structure and fees, which, this is not the right platform to answer those questions. And you can write to Yusuf directly if you have any queries regarding those in terms of, investment banking and fees and things like that. But I have posted your email address, Yusuf, on the group, as well as your LinkedIn address in which they can contact you. Yusuf, of course, is very busy, but I'm sure he will do his best to
please
as promptly as possible. And maybe some opportunities arise in future. Definitely, if you're deserving, why not, right? So thank you. Can we all please, I know we can't do physical, round of applause, but can you please give a big thank you to Yusuf Salam, who has, prepared this presentation and spent this time to focus on a very, misunderstood area, which is investment banking, and talked about opportunities as well. I hope this has been useful. The recording of this session will be available on the CFA Emirates website in about a week from now, so you can watch it again if you wish to. You can contact Yusuf for more interaction if you wish to. Please fill the survey form that will be sent out shortly at the end of this webinar. And please tell us what topics you would like us to have more webinars on, because that's our endeavor to try and upskill and make candidates and members more employable and more work ready. Thank you so much, Yusuf. Thank you so much, everyone, for attending. Thank you for your questions, and have a good evening.
No, thank you, Bino. That's been great. And thanks to everyone. I know it's a Saturday afternoon and it's great weather as well. So as Sivan reminded me. So thank you so much for making it here and being so interactive as well on the chat. It was really great to speak with all of you.
Thank you so much. Bye.
Thank you.